Fears of a rate hike. When you look at what's happening on your screen right now with the Dow down 227, we're well off the lows, but it's still not a pretty day. And you got to think that it's fears not just of a rate hike, but that the Fed may be plotting a course of action that they don't even know an inch ahead of them what it's going to be. Divided Federal Reserve is inclined to stand pat. That's according to the Wall Street Journal's John Hilsenrath, who says it's looking way more likely that the Fed won't move on rates until the final chance this year in December. Just yesterday, Fed's resident dove, Lael Brainerd, cautioned prudence in boosting rates. It seems like her voice was really the one people looked upon, even though some of the most followed guys on Wall Street are saying enough already, just pull the trigger on rates. Listen.
You don't want to be behind the eight ball in this one, and the Fed has to maintain credibility, and I think it's time to raise rates.
I think a rate increase is long overdue. I agree with Jamie. They ought to get on with it and get it over with.
I like Jamie Dimon a lot. I think he's absolutely correct. The rates need to move.
Terry Duffy, Wilbur Ross. So what should the Fed do? What will it do is really the question. John Hilsenrath, I'm pretty sure if anybody knows it's you, John, you're the chief economics correspondent at the Journal, Fox Business contributor. Your headline says December, right?
That's what it looks like. It really doesn't look like they're going to move in September. And, investors and people like Jamie Dimon out there can be excused if they've been a little surprised or befuddled by what the Fed is up to, because the Fed's own leadership had been sending signals up to a few weeks ago that they could move in September. Janet Yellen was in Jackson Hole saying the case had strengthened, and Bill Dudley was right here on your network with your own Peter Barnes saying that the market had become complacent about a Fed move. Now it looks like they're deciding they're not ready. They don't have a consensus to act, and that leaves them their December policy meeting for one rate increase this year.
So Bill Dudley said that. Then we had James Bullard on, that was August 16th. He said, I think a September rate hike is possible. James Bullard of the St. Louis Fed, August 26th, September might be a good time. And then Dennis Lockhart yesterday saying, I'm pretty sure we've got to start doing this. I fear, John, I know the Fed is in a tough position, but I fear that the transparency era that was ushered in by Ben Bernanke has really created a monster. These independent voices are a confusing cacophony for the investor right now.
Well, I think that's something that frustrates even the top people at the Fed. And maybe that's something we'll have to ask Janet Yellen about in her press conference next week. But again, I think Yellen is in part to blame, too, because she was out there just a couple weeks ago herself saying the case had strengthened for a rate move. And this is also the result of an economy that just never cooperates with the Fed's own forecasts. They're expecting inflation to pick up. They're expecting 2% growth. They're expecting the unemployment rate to fall. Well, the unemployment rate hasn't fallen this year. We're going to struggle to get 2% growth, and inflation isn't rising to their forecast. So they're changing their minds because the numbers aren't coming in the way they expected them to.
We just got Charles Payne in the chair, and he's one of the best Fed watchers, second to you, John. Charles, of Making Money, I have to wonder, do they need to present a united voice? Should they just shut down all of these speeches?
I do think it is very, very confusing, and it's also interesting that the last person that speaks is the one that moves the markets. But I think yesterday, Brainerd, her speech was interesting in the sense that she said that there's a new normal. We don't want to keep hearing about new normals, and when she says that the Fed is confused with its own sort of playbook, that the Phillips curve, in other words, unemployment has gone down, not necessarily this year, but it's gone down from 8 to 4.something%. So inflation should have gone up. Instead, inflation has been, flat, if not, sideways, if not even lower. And then she said also that the labor market slack was greater than anticipated. A lot of things that they're supposed to understand this stuff better than everyone else. They're supposed to have the ability to read this and anticipate and to make the right moves, preemptive moves sometimes, because this is exactly what they're going to do. So I think they've lost credibility. I thought they lost credibility, more credibility rather, last week with talk of a rate hike. After 151,000 jobs created, after an ISM number in services and manufacturing was really very lackluster, and a lot of the key big macro data points have not been up there.
John, if what Charles is saying is true, if they don't know, maybe they better just not say anything because they start to look like the gang that can't shoot straight.
Well, I think one of the benefits here is the market gets to see that this institution is not an all-knowing institution. They're like the rest of us trying to figure things out. But I'll tell you, one of the problems that the Fed's going to have in the years ahead is that they don't think rates are going up much at all. You know, they think that a neutral rate in this environment, you know, even if the economy was back at full health, would be something like 2%. So that gets them maybe 5 interest rate increases over a course of 2 years. We're going to have a lot of meetings over the months and quarters to come where nothing is happening, and all we have to do is to speculate when. And I think some of us are maybe going to be pulling our hair out of our heads.
Yeah, you know, and John, I'm with you on that, but and we know that they don't know everything. I think, in fact, people around the world have come to the epiphany that central banks may know a lot less than we all thought before, but they still have that power, right? They still have the power to move markets, to print money.
Well, look at it today.
And if they can't at least keep that credibility as their last quiver in their arrow, then they have nothing left, I don't think.
Well, I think, you know, ultimately the most important part of their credibility is to get the decision right, and I think that's what Yellen will argue at her press conference is if it's not time to raise rates, she doesn't want to do it just to please investors and people like Jamie Dimon.
Well, there's never going to be a right time. That's the worry.
Well, you know, I think the right time will be when we see either inflation rising or markets really overheating. And, you know, these are markets, it's hard to say they're overheating. You might say they're overvalued, but, you know, in a market that's overheating, there's new records being hit every hour, not new records being hit every 20 years.
Got to stay tuned for Charles Payne tonight at 6 p.m.